Hey everyone, Brian Bogner and Greg Towner here with Parallel Portfolios, and this is our 5-minute update where we're going to just tell you a little bit about what we're seeing in the market. So Greg, when we talk about stocks, we had a very strong January, obviously. February was not so great a month. And here in March, it's been a little bumpy. Tell us what you're looking at right now.
Yeah, absolutely, Brian. We've talked a lot about the positive price trends for U.S. markets for the last, quite some time now. Of course, like you said, February is where we saw that sharp pullback. And when we last spoke to you on video, we'd actually rallied right back up to this green line, the 50-day moving average. And we talked about at that time, there was a couple of different scenarios. A lot of people were looking for maybe a retest of those recent lows to kind of shake out some more weaker hands. But we also mentioned there's a good possibility that sometimes corrections just happen with time and not so much declining in price. And so we'll see. But so far, for the last month, you can see there's a lot of choppy back and forth across the 50-day moving average right here. So we think right now there's the potential for this correction to kind of play itself out really through time, maybe more so than additional downside. So we'll see how the next month or two goes. But right now, that's kind of our base case thinking. Things are still looking solid.
Sounds good. We talk a lot about U.S. stocks. And I know as a firm, we've been reallocating more internationally right now. Can you tell us a little bit about some things that you're seeing in the international front?
Yeah, I think it's a good time for us to talk internationally. And I think even more specifically, emerging markets. What we look at the chart here, this is a broad emerging market price chart at the top. Very looks similar to the one we just looked at, the S&P 500. Nice uptrend. It also had a correction, not quite to the 200, it was a little stronger. And again, has been chopping around here. If you look at this bottom chart, Brian, this is what's called a relative strength chart. So this is the emerging markets relative to the S&P 500. So as it's moving from the bottom left to the upper right, it shows that it's outperforming the S&P or the U.S. broader market. So for the last year and a half, emerging markets have actually done pretty well here. And sometimes people think, well, it's already been a big winner. Maybe it's come too far too fast. We don't think that's the case. And let's take a step back and look here at a longer term perspective. This goes all the way back to the 1980s. This is emerging markets relative to global equity markets. We can see that they tend to have big trends in both directions for quite some time. In the 80s and 90s, 7 years of a big move up. Late 90s had a big move down. Around the turn of the century, it started a big 9-year outperformance. And then here, just ending just a couple years ago, it had a big down move. So we think there's a chance, it's just in the early innings, so to speak, of a big relative move. Now, of course, there's going to be a lot of choppiness along the way. Emerging markets can tend to be more volatile. But we think there's a potential for this to have some legs to it.
Good. What else you seeing?
Well, of course, there's always fundamentals to back up. It's not just the price movement, as important as that is. So let's look at valuations here. There's a lot going on this screen. Let's kind of walk it through a little bit. So on the left-hand side, this is the U.S. market. This gray column, this is the total range of valuations for the U.S. market over the last 25 years. The highest it's been, the lowest it's been. This purple row here shows basically the average, and we'll call it a blue box is where we are approximately now. So you can see the U.S. market a little bit overvalued compared to historical. Nothing extreme, but not a screaming value. We go over to the far right-hand side, emerging markets. We can see we're right on top of this 25-year historical, kind of in the lower third, let's call it, of historical range. So emerging markets showing pretty decent value, certainly better value than, say, the U.S. market.
Sounds good. All right.
And then, of course, we want to tie that into growth. So emerging markets has decent value. Let's look at the growth, the GDP. This purple line is emerging markets. You can see that it's growing at a higher rate than the green line, which is developed markets. And if we look at the gray shadowing in the back, that's actually the difference between the two. We can see that emerging markets is growing at an increasing rate compared to the developing market. So you have better valuations, you have better growth, you have good relative price strength trends. There's a reason that the U.S. market is considered we call it a blue chip type stock. Steady growth, safe. Emerging markets can be volatile, we know that. But there are a lot of things there that look appealing.
Yeah. And how does it relate? Because I know a lot of this relates to how the dollar performs emerging markets as well. Can you talk a little about that?
Yeah, exactly. That's our next chart. And this is a chart of the US dollar index over the last year. You can see the dollar has been declining.
Mm-hmm.
Not so coincidentally, that's when the emerging markets have been increasing. There tends to be a kind of inverse correlation there. And so, we have the view that the dollar is potentially in a longer-term downtrend. And if that's the case, that will be a tailwind for emerging markets. In the very short term, the dollar has seen a little bit of pop here. Even since we did this chart, it's up a little more. Mm-hmm. New economic advisor to the president has talked up the dollar a little bit. So in the very short term, maybe that is a challenge for emerging markets. But longer term, we're constructive on emerging markets.
Okay. Well, good. So, in summary, as you started off talking about stocks, especially here in the U.S., still within a longer term uptrend, just correcting with time, maybe more so than price. We had that 10% drop, but now we're just been kind of little bumpiness here that we're correcting, which is good and continues to be bullish. But then as we look internationally, where we're seeing a lot of both value and relative strength is in the emerging market side. And not only that, the U.S. dollar is providing a tailwind for these emerging markets as well. So a lot of things are lining up there on that side. So that's it for our 5-minute market update. I'm Brian Bogner, and along here with Greg Towner. You can see his contact info there if you have any questions. And from all of us here at Parallel Portfolios, we thank you for your time, and you have a great day.